record high levels. Do you ever worry about the long term, though, maybe the effects of a bigger crash that might be coming in the future, which could affect tenants' ability to keep up those rent payments?
You always have to be concerned, but you have to look at government policy at that point. And government already has quantitative easing or printing money via the rental systems. It's called Section 8 and all that stuff. So, and real estate's a very big subject. Raw land is real estate, warehouses, apartment houses, office buildings, commercial. And I specialize primarily in apartment houses or rents under $700 a month. So those guys have got no place to go, unfortunately. During the boom, 2004, 2005, they were leaving our apartment houses and becoming subprime homeowners. Now they're moving back in. So it's actually a very good time for us. Plus, with the reduction of interest rates, my actual cost of money has gone far down, and I've raised rents. So it's a very, very good time for us.
Another concept I think that people should wrap their minds around is the idea that, your level of risk here really isn't that big no matter what happens with your tenant's ability to pay. Correct me if I'm wrong. These apartment complexes you own, you don't legally, it's not owned legally by Robert Kiyosaki, right? I mean, it's some entity.
Heavens no.
Yeah. So, if there's some kind of default, if it does happen, it really just becomes your lender's problem and the problem of whatever entity you and your partners form to own the place, right?
Right. It's called non-recourse financing. In other words, if one building defaults or blows up, it's the lender's problem, not my problem.
And so you, as I guess, at that level of investing, you stop worrying about what your credit score is.
That's the truth.
Yeah.
See, this is what I hate to say it, common people buy common shares of stock, but they don't know. And when you start going into multi-million-dollar projects, there's no way my credit score could cover the monthly payment, if you know what I mean.
Mm-hmm.
So then the bank has then got to run the credit score rating off the building. So my credit score is absolutely inconsequential. But for the little guy, it's everything.
Exactly.
It's a different world, and that's why you asked me the question, are we in recession, depression, or this? Well, for me, it's just a great time. And when the economy is good, it's a great time. When the economy is bad, it's a great time, simply because I have my rich dad with financial education, something our school systems don't do. Our school systems teach you to save money, get out of debt, and put your money in a 401k filled with mutual funds. See, the school system is complicit with the banks and Wall Street. Now, again, I'm not against it because that's where I get my money from banks and Wall Street.
Exactly. It's not good, it's not bad, it just is, and you make your decision on what side of the fence you want to be on.
Amen.
There was a time when you were at the level that I guess I'm at today. You own some duplexes, some houses, fourplexes, that kind of thing. Can you tell me how you were able to put your first big deal together, large-scale apartment complex? And what I'm asking is, say, what percentage of your own money went into the deal? How many partners did you get in with it? Just anything you'd like to share about that first big deal.
Well, what makes people money is not the size of the apartment complex. What makes people rich is knowledge. That's why I say in Conspiracy of the Rich, knowledge is the new money, since money is no longer money. But there are 3 laws of compensation that most people violate, and I do mean most. The first law of compensation is the more you give, the more you receive, right?
Yes.
And most people want to get paid but not work. That's why they're poor. They join labor unions and teachers unions and stuff like that. The second law is I must learn to give more. And so that's why you have financial education. And the third law is the law of compounding education, of compounding knowledge. So the more I focus on giving, the more I focus on learning how to give more, i.e., I've taken companies public through IPOs. I have big apartment houses. But as I do that, my knowledge increases. So as my knowledge increases, my ability to handle bigger apartments and bigger transactions is easier. But the average person who has been trained to be an employee or a self-employed like a doctor, they don't have that training. So they operate from what I call the kind of the greedy side. What's in it for me? How much money am I going to make? What are you going to do for me? And it's just tragic. I mean, they're so greedy because they're so desperate. They're not bad people. They just haven't been trained. So the big apartment houses just came because it was a natural evolution. So what you're doing today, you just keep going, and pretty soon you go, why am I doing this? It's time for me to move on. And you'll tell yourself when it's time to move on.
Got it.
It's not a matter of saying I'm going to be Donald Trump. Today I'm homeless, but tomorrow I'll be Donald Trump. Well, that's not going to work.
Yeah. It's a process.
I went to flight school. I flew for the Marine Corps. I didn't start off as a fighter pilot. I went through 3 years of rigorous training, and then they sent me to Vietnam. And so that's what most poor people who went to school and got good grades and got a job, they don't have that training. They don't have the mindset. They don't have the emotional, they call it, it takes guts.
Yeah. It just takes a certain constitution that you need to have within you.
And if you don't have it, then you should put your money in mutual funds and save and pray and, hope Mr. Obama has your best interests at heart.
And speaking of that, I can't let this end without asking you about what's in the news right now. This whole foreclosure freeze going on nationwide. I got some people suggesting we're going to have a nation of people that are going to stop making their mortgage payments, because of how badly the banks screwed up securitizing their own documents. I'd love to hear your thoughts on the scandal. How deeply do you think the housing market is going to crash? We know it's going to crash. My question is, how bad?
It hasn't started yet.
That's what I think, too.
Yeah, unfortunately. The reason is it's called mortgage resets, and the mortgage resets will start next year. The subprime were the first guys to go. They fell. But now you're going to have the prime guys starting to go down, and it'll be in commercial centers and in office buildings and things like that. It's a tragedy. So it's not that the banks screwed up; it's that the mortgage resets will hit us now, starting next year. So we're only seeing the tip of the iceberg, which makes it really good because there's going to be more homes available at good rates for people with credit. But the trouble is, if you don't have credit, you're finished. That's where for the common people, a credit score makes a big difference. But if for somebody like me I'm 63 years old, I've been doing this as a kid, and the banks are calling me up saying, hey, can you borrow more money from us?
Unbelievable. And then the other thing...
It's just a different world, but that's where financial education kicks in.
Yeah, and then the other part of this is that you've got more people running into your apartment houses on top of that.
Oh, that's what I mean. And see, I know my niche. My apartment houses were built between 1975 and 1985. That's my niche. So they're older apartment houses, so I can buy them real cheap. Then you just rehab them and rent them for higher rates. Like you put washer and dryers in them, and you can increase the rent $50. Now, I borrow the money to buy those washer and dryers, and that borrowed money might cost me $3 a month, but I've increased my rent $50 a month. So I make a better product at a better price for my tenants. The other thing is I only invest where there's jobs. So most of my investments are in Dallas, Houston, Oklahoma City, parts of Arizona near the central business districts, or where there's a college. So I'm always real estate is not real estate. Real estate is debt management. That's all it is.
You mentioned that you said 63 years old. You've been doing this for a long time. Do you find yourself as you get older to be more selective, a little bit more careful about the partners that you choose to get involved with?
Yeah, well, my bud is the Donald,
Yeah.
And, he's a great guy. He's exactly as you see on television. He's exactly that in real life. He doesn't hold back. And he and I were talking one day, and he says, at our age, I don't need any more friends. He says, I don't want to find out if this guy's a crook or not a crook.
I see.
I don't want to find out if this guy's competent or not competent. I want to know they're competent from years of experience. And what I see happening right now, the crooks and the incompetent ones are really struggling, really, really struggling. Because, the boom economy starting from 71 when Nixon took us off the gold standard, you could be a complete moron and incompetent and still do well. But today, the incompetence is floating to the surface like, what else floats to the surface? So it's you had Tom Wheelwright on your show. Tom Wheelwright's the best CPA in the whole world.
Yeah.
That guy has made me so much money, it's staggering.
Hmm.
So you have to have a good team. You have to have good people around you. If you haven't, I had one of these big-name accounting firms. Those guys, I don't know how they can look at themselves in the mirror in the morning. I mean, they are functionally incompetent.
Yeah.
They were giving me advice that was so bad. I sat there looking at them going, you guys went to, one guy was from Harvard, another guy was from Yale, and you guys, I know more than you do. The trouble is that they've been trained to be employees, not entrepreneurs.
That's it. Simple as that. Well, Robert,
yeah.
to wrap things up, these are very volatile times for some investors and everybody else who follows the news and the financial world. How do you prepare? How do you financially survive and thrive? You've said a little bit of this, but just to kind of wrap up in the years ahead.
Well, I started my financial education at 9. And that's why, I don't think going to school is a very much benefit to most people financially. Now, education is important, but what kind of education? So, Rich Dad has Rich Dad courses on stocks, real estate. We have coaching and all that. And that's for people who really want to take control of their lives. If you just want to be a high-paid employee or a doctor, then you just turn your money over to a financial planner and buy, hold, and pray.
And the book is called...
Like to do that.
Yeah, and the book is called An Unfair Advantage. It's coming out pretty soon. When are we going to see that, and tell us a little bit about that before you go?
Well, the book is finished. We're just going to have we haven't decided on the release date. But the book Unfair Advantage is called The Power of Financial Education, and it's about how I use debt and taxes to get rich, where debt and taxes make most people poor. And it's going to open most people's eyes. So, anyway, a little education can go a long way. But I don't stop. I don't stop learning. Most people left school and stopped learning. That's their problem. So, anyway.
Robert Kiyosaki, a big honor having you here on the Financial Survival Podcast. Thank you very much.
Thank you very much. Keep up the good work.
And that's it for this episode of the Financial Survival Podcast. Remember, we do not give financial or legal advice here. We're just exchanging ideas, information, and opinions that are subject to error or change. Every investor's situation is unique, and you are solely responsible for your own investment and financial decisions and actions. I'm Jay Carter. See you next time right here on the Financial Survival Podcast.